Good evening and welcome to Economic Sense. I'm Rebecca Cressman and we're in the KBYU 11 studios with Utah experts who can answer your questions about mortgages, foreclosure, and housing fraud. The current economic strain has caused a housing crisis affecting many across Utah. Tonight, we hope to offer a bit of economic sense and help Utahns keep their homes. On air this evening, we'll be following up on questions from you. We also invite you to call in and speak directly with expert mortgage and housing counselors who are manning the phones and who are ready to provide you with reliable and confidential answers. If you have questions about mortgages, foreclosures, fraud, or other housing issues, we welcome your call at 1-800-298-5298. We'd like to thank the housing specialists from AAA Fair Credit Foundation, Utah Housing Coalition, and Community Action Partnership for being available to take your calls. Tonight, we're also going to cover mortgage basics, foreclosure, and how to fight it, and how to avoid mortgage fraud and predatory lending. Links to reliable resources about these topics are available online at kbyutv.org/economic sense. For those in difficulty, one of the biggest hurdles is knowing where to turn for reliable help. Now, the best place to find help in your area is 211 Resource and Information. To begin our program tonight, let's watch this introduction to 211.
Sarah, get me the Bluebird Diner.
There was a day when all you had to do was pick up the telephone and the operator could provide you with whatever information or number you were looking for. Then we let our fingers walk through the pages of the phone book, and with all the advertisements, categories, and small print, things became a little more complicated.
I just don't know where to look in this phone book. I can't find what I'm looking for.
Of course, the Internet can provide a great many resources.
158,000 sources, and not one in my town.
But now, just like in the good old days, you can pick up the telephone and get the information concerning community resources you're looking for.
Thank you for calling United Way 211 Information and Referral. This is Sarah. How can I help you?
Well, hello, Sarah. Could you tell me where I can get some information about services for senior citizens?
211 is the number to call for referrals to the agencies that provide help, services, and assistance. The 211 program spans 46 states nationwide. However, it is sponsored and directed from agencies in your own community. Because the people who staff 211 live locally, they have their finger on the pulse of what's going on in your area as well as what help is available. This gives them the personal knowledge to better direct you to the proper establishment. The 211 program connects you to legitimate nonprofit organizations which can help you find resources, solutions, and answers to a wide variety of questions.
Oh, yes. Could you tell me where I can get training for a job that I want?
Hi, is there somewhere I can go to get medical help if I don't have insurance?
Sometimes I just can't control myself. I get so angry. And my children, they're starting to fear me. What can I do?
I just needed some information. Where can I receive assistance in getting food for my family?
My wife's drinking a little too much. Where may I go to find help for her?
The 211 service is free of charge,
Yes,
and the resources to which they direct you are confidential. Here in Utah, information regarding hundreds of federal, state, and community agencies can be obtained by dialing 211. When you call 211, a friendly, knowledgeable staff member will take the time to assess your needs by asking a few questions in order to better direct you to the proper agencies that will meet your needs. 211 can also answer questions about local volunteer opportunities, which helps others give back to the community.
Okay. Yeah, we have plenty of organizations that are looking
Informative, safe, confidential, and free. You can find the answers concerning resources in your community by simply dialing 211. Remember, no matter what your position or station in life, 211 Information and Referral is here to help because it's okay to ask.
201 is a great resource to remember. We have with us in studio Ryan Carver. Now, Ryan is the Director of Housing for the AAA Fair Credit Foundation, which is a nonprofit agency here in Utah. He's going to be with us this evening to go over the basics of mortgages and foreclosure. And just a reminder, if you have a question for the housing counselors who are manning the phone banks, you can call 1-800-298-5298 whenever you need to. I've got to say thank you for being with us, Ryan. And
thank you.
You know, we hear a lot about foreclosures. Why are there so many people having troubles with foreclosures and their mortgages?
Well, it's multifaceted. There's so many reasons why this problem stemmed out of hand. We've got economic downturn due to employment. So a lot of people are dealing with unemployment that weren't before. People may have lost their jobs and got a new job. So now they are back to work. However, they're underemployed, not making as much. So now you have that economic crunch. You have people just not managing their finances. You have, there's so many different reasons. There's, unfortunately, we can't just say it's someone's fault. It's not the government, it's not an individual. Everybody takes a part of the blame.
I think when you do that too, when you say, okay, if we all have a part of the blame, then it means that we all have some responsibility in the fix as well. So, all right, so underemployment, people who are finally returning back to the workforce after losing their job maybe for a year or so, that's about on average how long it takes to get a job, but they're not earning as much as they used to, so they're having a harder time paying the mortgage that they used to be able to cover in their previous employment.
Exactly, exactly. Or they're having to go get a part-time job, or having, you know, more people in the household step up to the plate and help with unemployment.
All right, well, besides my ability or the people's ability to pay for their mortgages, what other facets are out there that affect the reason why we have so many foreclosures?
As in what?
As in the other, does it have something to do with the type of mortgages that we've gotten ourselves into? Because there was so much. It seems like we had the land of fruit and plenty, or at least out there, and we were all choosing from so much.
You know, there are a lot of different mortgage products, and a lot of people say, you know, I got a bad mortgage, and in a very small case, I would say that's right. I think mostly it's just a lot of mortgages that are good products being marketed to the people that don't really need them. For example, an adjustable rate mortgage, it serves its purpose, but they're being marketed to everybody, and it's really not designed to be for everybody. So is it a bad mortgage or a bad loan? No. But if you aren't in the situation that best lends itself to an adjustable rate mortgage, then yeah, you're going to find yourself having some problems.
And so you have a lot of people that might have gotten into what could be a good mortgage, but it was not good for them in the end.
Exactly, exactly. And it goes back to a lot of different things. I mean, you're always going to be overqualified for more home than you actually can afford. And you know,
I mean, that's a tremendous statement to say right there.
It is.
And it is true. I remember just the last time that we were looking at purchasing a home. You know, the lender was saying, well, you know, congratulations. If you would like, you could buy a home worth this amount, which was about $150,000 more than we were planning.
Yeah.
And so is that, I guess, when self-control kind of kicks in.
And that's the hardest thing, because the home is such an emotional purchase. It's not just, it's more personal and emotional than any other purchase, because it's not just the physical structure you're buying. You're buying, you know, the cute little kitchen nook. You're buying the neighborhood, the perfect landscape, the fact that you're close to schools. It's a very emotional buy-in. And so when you're told you can qualify for so much more, it's really hard to put on those brakes and say, you know what, I'd really love that, but honestly, I can't afford it.
All right, so we have a lot of people who didn't put the brakes on. And when you say that the blame can be shared, did we also have then, we read about overeager lenders that were maybe taking advantage of that emotional goal? We all had to have the ultimate house.
Oh, definitely. I mean, it goes back to, there are good lenders, there are bad lenders, there are good loan officers and bad, and I'm not trying to, you know, blackball anybody. But there are those who, you know, wanted to, you know, make the commission, and, you know, and it's hard to just say, you know, they were just trying to make a quick buck off of me, because ultimately it is, I mean, if I'm going to say, you know, you can qualify for this house, it's your responsibility, and it's up to you to say, you know what, I'm going to take it or I'm not going to take it, regardless of whatever information or counsel you're given. Say, hey, you know what, I don't think you can really do this. You're not hearing that. You're looking at where you can put the couch and how does it fit in the living room, and you're not thinking, you know, sometimes you're just not thinking clearly.
Well, and you mentioned that with the recession we had unemployment and we had underemployment, and we still are dealing with that. But when it comes to surprises, because the home purchase is an ideal, and every once in a while life does not give us the ideal, and you have catastrophe. So some of the problems that we have paying with mortgages might not be something about greed, and more about a health issue that might have come our way.
And we're seeing a lot of that. It's like I said, there's so many different reasons. There's just, maybe medical bills came, and those can be really expensive, and a lot of them, I mean, they just keep coming and coming and coming. Or it could just be, you're out of work and there's really nothing you can do about paying those bills. I mean, there's not a lot of resources as far as being able to give you the money that you were making if you're unemployed.
All right. So when people come to you and they're saying, all right, I'm concerned about my ability to pay my mortgage, is this part of your conversation? Is there a lot of reasons why this is happening? But what is the next step after that of just acknowledging, okay, I'm in trouble?
Well, that's the biggest, crucialist factor is a lot of people want to kind of be in denial about, I can get this taken care of. It's really hard to ask for help for anybody. And so a lot of people don't ask for help until it's really too late, because it's hard to ask for help. It's a vulnerable situation, and nobody likes to be in a vulnerable situation personally. It's like you're backed into a corner. So the biggest thing is acknowledging that you are going to have a problem. You don't have to be in that situation, so you don't have to be late with your mortgage. To realize, hey, I think I'm going to be having problems coming up, or I'm already having some problems. The sooner you can acknowledge that, the sooner you can get help, and the more options are going to be available to you.
And do not be afraid to ask for help. And we've been telling people that they can call in and talk to housing counselors that are manning the phones right now. And we've got a call right now, Dave, with a question about mortgages. Dave, welcome to Economic Sense. What's your question?
Hi, I've always paid my mortgage really faithfully, but recently I've had some financial setbacks, lost a job. Are there warning signs that I could really look for to know if the bank was close to foreclosing or working on doing that towards me?
Well, that's a good question. There are a lot of different warning signs per se. It's a very systematic process when you are in the foreclosure, when you're in default, when you're not making payments. Usually, you're going to be getting lots of letters, telephone calls from your lender or your servicer within pretty much when you first start missing a mortgage payment for the first, maybe 1 or 2 months, trying to extend a helping hand to you. What's going on. They want to know what's going on, and they want to see if there's anything they can do to help you. Now, if the problem is a lot of times people stop opening their mail during this time because they're just afraid.
They're stressed.
They're afraid it's the eviction notice, and it doesn't come in that quickly. But that's why it's crucial to always be, looking at the correspondence, because a lot of times it's that helping hand that you're wanting, and you may not even need to ask for it. Usually, when you're 3 to 4 months past due, you'll be given a specific, it's called a notice of default. It's going to be sent to you, certified mail. There's no way that you can't not get it. I mean,
you're going to sign for it.
You're going to sign for it, or someone in the household is, and it's just pretty much saying, it's a notice of default, saying you are past due. Try and fix it by this time. Here's some numbers and resources to help you do that. If not, we're going to start the foreclosure process.
All right, but for those first few months, as you talked about warning signs, the first warning sign is when you're not writing a check, you're not sending a payment. The second one is when you are so emotional or so worried or so anxious, you start trying to put that correspondence away.
Yeah.
And the more correspondence you get, the more that you realize you're starting to get underwater.
Exactly.
And I like what the point you said is that the earlier we reach out for help, the less deep we'll get into the problem. So that was, and then the next was the notice of, what was that official?
Notice of default.
Notice of default.
And that's just a official document. It's kind of intimidating when you get a document and it looks very legal and professional to, kind of panic. But it is pretty. I mean, it just says, here's the balance. Here's how much past due you are. The last payment we received is this date. If you don't get current by this date, we're going to start the foreclosure process, and then a whole bunch of legalese stuff later.
Well, and when you say legalese, that kind of brings me just to a very basic question. When you get something like the notice of default, is your instinct then, should I call a lawyer or should I just place that call to the mortgager that I've been kind of postponing?
You know, it's the person's choice. Okay. A lawyer, you're going to usually have to schedule an appointment, and that's going to be money. Okay. Money that you don't have because obviously you're not making a mortgage payment. So, you know, calling a housing counselor, or on that notice of default or all those other letters that you've been getting has numbers for you to call. So if you know you're having a problem, talk to a housing counselor or get in contact with the servicer as soon as possible.
All right, and then find out whether or not, have you seen in your situation that when that notice of default comes your way and you respond as if someone says, okay, I acknowledge this is my loan, I'm over my head, I need some help. Are there some olive branches that are possibly handed out our way then through the mortgager?
Well, it's kind of like I said earlier, the sooner you ask for help, the more options are going to be available. The longer you wait, they're just more limited. Okay. Not only by options, but by time. It's a foreclosure timeline. I mean, sand's going through the hourglass, and there's only so much of it. So the earlier you can call, the better.
And okay, foreclosure timeline. And is there an average timeline that we can expect certain things to happen? You mentioned at 3 months or so is the notice of default.
3 months. Usually, you're going to be getting your notice of default. Pretty much from the date you first miss a mortgage payment to foreclosure, 6 to 8 months. Could be longer depending on, you know, if you're trying to work something out. Usually when you are in active negotiations with the servicer, they will kind of put the brakes or pause the foreclosure proceedings while they're kind of investigating.
That's a good thing.
It is a very good thing.
We've got the timeline right now on the screen, and you're seeing kind of the first chunk in gray, and then there's the yellow segment. Is that the negotiation period then? Yeah,
that's the first gray section is usually saying the servicer outreach is saying, hey, you're past due. They're trying to collect their money. That yellow section is where they're not so worried about getting their monies. They're realizing you haven't called by now, so you don't have the money. So that's the olive branch that you're talking about. Okay. Let's offer them whatever packages or whatever options that they could qualify for to turn this around.
All right, and then the third segment depends on whether or not we're able to come to some kind of an agreement.
Well, it depends on whether you take advantage of it. I mean, if you don't respond to anything, I mean, that little yellow section goes straight into foreclosure.
Which it's got to be one of the most emotional times of any homeowner's life, to think about losing this major investment that was your ideal or represents. But it could be from the beginning of missing a payment to losing your home and moving out is on average about 8 months, about that.
6 to 8 months. Okay. We're seeing a lot longer just because people are trying to work something out, so we have that pause button, and it'll be paused and then resume, and then so that's what the law says. It may be longer, but don't count on it. Don't be counting on, oh, I've got, I'm only 5 months past due. I've got plenty of time. I don't need to worry about anything. Right. No, that's not the case.
Okay.
It's not the case.
Well, let's find out what the case is with Julianne. She's calling in from Provo with a common question. Julianne, welcome to Economic Sense. What's your question?
Hi there. I just recently lost my job. I've been paying my mortgage faithfully for 9 years, but of course payments are getting harder to make. I don't think I'm going to be able to make next month's payment, so I'm just wondering what my options are.
Oh, right off the top. Julianne, thank you for your call. And what a struggle, because she's someone who's been responsible throughout the history of her home. What happens now, month one?
Well, get help. Know where to call. Call 211. Call a housing counselor. I can't say that enough. Important things that you're going to want to know is one simple question. Is it viable to stay in the home? Now, we like to phrase it like that because do you want to save your home? Of course, everybody wants to save their home. But is it, can it actually happen? So that's where we go. We go through a budget. We look through the finances to see what options. Can we stay in the home, or do you have to get out? And there are multiple options within each one. I mean, you could, refinance. There's loan modifications, which are the latest craze. It's the buzzword everybody knows or hears about them. They're very complex. I mean, forbearance to kind of help you out through a temporary period of time. There are a lot of different options to keep you in your home. But the biggest thing is, what's your current situation? And is it going to be resolved anytime soon? Or
are you eventually going to have to lose your home? We have just a couple more minutes in this segment with you, Ryan, and I just wanted to go through that. You've done a beautiful job painting out the painful timeline. But if we do get to the point of foreclosure and having to lose our home, after that notice of default, what happens? I mean, what are the things that happen between that and our eviction?
Well, you're going to be given, there's going to be a lot of different notices, not necessarily to you, but I mean, you will be getting stuff on the door. It's going to be public notice. I mean, once that notice of default goes, the public can view it. If you're not making any attempts to try and save your home, they're going to start saying, hey, there's a notice of sale. They'll give you a date, and they'll start publishing it in, it could be a magazine, it could be a newspaper, it could be, the community board outside.
As part of that legal process.
Yeah, as part of the legal process, they have to tell the community that there's a sell date for a property. There's also going to be borrower notice of that sell. You're going to be continually getting notices saying, hey, the sell's coming up, any news, it's a week out now. So there will be a lot of different notices, and like I said, most of them will be coming certified mail or, kind of.
So you won't be blindsided by that.
No.
You're going to have a lot of warning before that happens. This is, I guess, a mixed question, but is foreclosure ever a good thing?
Yes and no. And it's for that emotional aspect. Having to leave a home it's hard emotionally. So is it ever the right thing? It can make sense. It really can. Does it make it any easier? No. But there are people, dealing with all the unemployment, and if they haven't been able to get a job for so long, or it's just things get bad to worse, and we see that. It's not just the unemployment; it's the unemployment plus the medical bills, plus home repairs, and they don't have money to do things like that, and it's just. When it rains, it pours, it seems like.
So at some point, if in your situation you've done all you can, that might be the next step for you to move forward.
Yeah.
Is to relieve yourself of that debt. Your credit rating after a foreclosure, how's that affected by it?
Well, it's definitely going to be greatly affected.
For 5 years, 10 years, is there?
7 years, if not longer, depending on where you kind of jump in and correct it. But at least 7 years. 35% of your overall credit score is on payment history. So if it takes 8 months for you to be foreclosed on, that's 8 months of not making a payment. Not just any payment. It's not like your little, credit card. It's the doozy.
It's the big one.
It's the big one. So yeah, that's one of the single largest factors that affect your score is payment history. So by not making that, that's really hurting it. But I'm not trying to downplay that. I mean, credit is very important because that's going to help you leverage you into transitional housing. But it's really not your biggest focus. I mean, you got to focus on the priorities, keeping a roof over your head, food on the table, and if you have a job, being able to get to the job so you can keep the roof over your head and the food on the table.
Well, and I guess the message too is there is life after foreclosure if that's what you need to choose.
And a lot of times we have to step back with our clients because losing their home seems like a big deal, and it is. But we have to kind of step back and say, your home is only a portion of who you are. It does not make up who you are. It's just a portion. And your life does go on, and there's a lot of different aspects of your life that aren't affected by your home.
Well, and just in terms of where you're living, if you go through the foreclosure process and the bank says, okay, it's no longer your home, it's now back in our name, is there a period of time where you can still live in that home, but it's no longer under your name and it's under the bank or the lender's name?
Yeah, you usually call that squatting.
Oh, not a good thing.
Not a good thing. Foreclosure looks bad. Eviction looks worse. Foreclosure happens to good people. Eviction saying, we had to forcibly remove you from the premise. Now, being foreclosed on, you're going to need to probably rent. What landlord is going to want to rent to someone who they had to call the sheriff to kick you out of the home? Makes it very difficult. So if you have been foreclosed on, or the auction or sell date's coming up, start packing, get somewhere, because you can lessen the effects of making it look really bad.
All right, wonderful. We do have a call. Well, it wouldn't be wonderful, but we do want to lessen the effects. So
yes.
Appreciate that. They call that squatting. We've got Peter from Provo on the line. Peter, welcome to Economic Sense, and how can we help you tonight?
Yeah, unfortunately, I'm facing a foreclosure on my house, but a friend told me that if I put my house up for sale, that the foreclosure would stop, and so I just wanted to know if that's true.
Oh, okay. I have not heard about
Nope.
this, so not true.
Not true.
Okay, so talk to me about that. Why once the foreclosure proceedings begin, why can't Peter say, wait a minute, let me just see how much money I can get out and pay you that way?
You can try and sell it, but just the simple act of putting a for sale sign, for sale by owner, or getting a realtor doesn't stop anything. Doesn't stop anything.
Okay.
So if you're thinking, hey, I don't think I can stay in the home, I want to look at selling, yeah, throw it up there, try and get it sold, try and get as much money for it as you can to, get you somewhere else. But the simple act of getting a realtor or putting a for sale sign up on the front lawn doesn't guarantee that you're that you're okay and that
you still have a certain amount of money that you own that lender. So
exactly.
if you sell the house and you want to come out clear, you got to sell it for more or at least as much as what you owe.
It's a responsibility. By getting the mortgage, you said, this is my mortgage, I promise I'm going to pay this back. When you stop paying, you've got to satisfy it one way or another. Just think of it just like a car loan, but on a bigger scale. I mean, when you try and sell a car, you've got to get all your ducks in a row, make sure that you're selling it for at least what you owe on it, or you've got to be talking to the bank and working things out. Same thing with the home.
The numbers might be bigger, but the principle is still the same.
The principle is the same.
All right. Thank you so much
for
your time. Learned an awful lot today. And, of course, he's given us some keys to understanding not only mortgages but foreclosures and how to help them handle them as a family. It's important for us to understand the basics in order to go about improving our situation. That's why we're here tonight. As we said before, housing specialists are available tonight to take your calls and your questions at 1-800-298-5298. For more information and for links to reputable Utah housing resources, you can visit kbyutv.org/economic sense, or on weekdays you can call during business hours 211 Resource and Information. 211 representatives will direct you to the places in your community that can help with everything from affordable housing to legal needs, from credit counseling to health care and much more.
Economic Sense is made possible by contributing viewers of KBYU and by the Utah Housing Coalition, Community Action Services and Food Bank, and Utah State University Extension.